Hello and welcome back to the channel. Today I'm going to be talking about a topic that is crucial for anyone who is looking to buy a home in Saskatchewan, and that is qualifying for a mortgage. So whether you're a first-time home buyer or you're just looking to upgrade, understanding the ins and outs of mortgage qualification is really important. So let's get started. So one of the key factors in qualifying for a mortgage in Saskatchewan, or anywhere for that matter, is your TDS, or your total debt service ratio. So this is a measurement of your ability to manage your current debts alongside your potential mortgage payment. So there's the front end ratio, which is the percentage of your gross income that will go towards housing expenses. So this would be your mortgage payment, which would be the principal and interest, your property taxes, and your insurance. In Saskatchewan, lenders prefer this ratio to be 32% or lower. And the back end ratio takes into consideration all of your monthly debts. So this would include your credit card payments, your student loan, your car loan, and also your housing expenses. And this ratio should ideally be 40% or less. So to increase your chances of getting approved for a mortgage in Saskatchewan, make sure that you pay down your debts and avoid taking on any new ones. So this will obviously improve your TDS, or your total debt service ratio. Your TDS isn't the only thing that's going to be taken into consideration. A lender is also going to be looking at your credit score. So a credit score is a number between 0 and 900 that is calculated by a credit bureau to assess the likelihood that you're going to pay your bills on time. So the higher your credit score, the more trustworthy you look to potential lenders. So if you are a first-time home buyer who is needing CMHC insurance, then you're going to have a minimum credit score of 680. So another significant factor that lenders consider when approving a mortgage is your career stability and your income stability. So obviously lenders are going to want you to have been with the same employer or the same career for a longer period of time. The longer the better. So for example, say if you have started at a new job, you may have a harder time getting approved for a mortgage because there's typically a probationary period of maybe 3 to 6 months. So you typically will not get approved for a mortgage until you're past that probationary period. And a lender will also want to know that this is a permanent position. Another sort of situation that is different is if you are self-employed, or perhaps you have a job, like a real estate agent who works on commission. So their income is not always the same every 2 weeks. They may get commission checks, some months, and then other months it may be a little bit less. So for jobs like that, then the lender is going to want to see probably 2 years worth of T4s just to confirm that the income is steady and that it is able to support the loan. So it's a really good idea to try and stay in your current job, or at least within the same industry during the mortgage qualification period. Now let's talk about where your down payment can come from. So in Saskatchewan, like many other places, a 5% down payment is typically required, and the source of this down payment matters. So you could get your down payment from savings. This would probably be the most common and the best place to get your down payment, because having saved up the money over time shows responsibility. And you can also use a gift from a family member as a down payment. Some lenders do have certain rules and documentation that is required for this. So that's something to look into. And another way that you can get a down payment is from your RRSP. So in Canada, the home buyers plan allows first-time home buyers to use up to $35,000 from their RRSP. So remember that the size of your down payment can affect obviously will affect your mortgage payments and can affect your interest rates. So the higher the down payment, the better that is going to be, and the lower your payments are going to be. So there you have it. These are some key factors to consider when, thinking of trying to qualify for a mortgage in Saskatchewan. It's really important to have a good total debt service ratio, to be financially responsible. Always make sure that you're paying your debt on time in order to keep a good credit score. Having a stable career and saving for that down payment. These are all obviously very, very important in order to get a house. So thank you guys so much for tuning in to today's video. I hope this video was informative. Please make sure you share it with your friends, like and subscribe to the channel for more information related to real estate. I'll see you guys in the next video.